Hello and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. So first up, July. What a turnaround for small caps. May be a major turning point for US small caps after years of underperformance. Also, this month brought with us some not so great data, but some favorable data for potential rate cuts at the end of this year. US unemployment rises, and also both PCE and CPI showing that inflation is softening, perhaps giving permission for that first rate cut in September to the Fed. So on the chart here, we have in the blue the Russell 2000 index, and in the green, we have the S&P 500 index. The Russell 2000 index last made an all-time high on November 8th of 2021. Since that point, the Russell 2000 is down 12%. In contrast, the S&P 500 has made more than 45 new all-time highs, up 22%. Dramatic outperformance for that large cap index. Now, things changed quite a bit during July. Now, this was post the CPI inflation report. After all of those years underperforming the S&P 500, the Russell 2000 rallied more than 10% in a 4-day time period from Thursday, Friday, up through the middle of this past week. And check out the difference here. This is the 4-day return for the Russell 2000 from July 10th up through July 16th. The Russell 2000, that's a US small cap index, was up 10.3%. During that same 4-day period, the S&P 500 was only up 0.6%. The difference between those two numbers, 10.3 minus 0.6, you get 9.7%. Why is that significant? The magnitude. That is the second largest difference in the history of the Russell 2000, going all the way back to 1978. Very rare territory in the short term. We are encouraged by this and would like to see a continuation of a broadening of market breadth. The past year and a half, we've continued to see large cap growth and the Magnificent Seven, those large cap tech companies. They are carrying the weight of the market, not this last week, and we're encouraged by that. Now, US unemployment. In April, 2 months ago, 2 reports ago, unemployment was below 4% for the 27th consecutive month. That is the longest streak that we've experienced since the 1960s. So the labor market has been incredibly strong. Well, last month, the month of May, it hit 4%. So that streak was broken. And in June, it ticked up to 4.1%. That is the highest unemployment rate since November 2021. And you're starting to hear Powell in his conversation at the Economic Club in Washington, D.C. with David Rubenstein said that he believes the labor market is, quote unquote, in better balance. Right. Remember, that's one of their dual mandates is full employment. That's a good sign for potentially lower rates. The other thing that is increasing the odds that the Fed is going to cut interest rates up to 3 times this year is the inflation data that we've seen out here. Check out this chart. In the orange shaded area in the background, there is the Fed's long-term target for inflation. That's 2%. A couple things stand out here. In the blue is the PCE year-over-year inflation index. That is the Fed's preferred measure. That came in on June 28th for the month of May, right? It's a little bit dated back in May, hit 2.6% year-over-year. So it was 0.6% above the Fed's long-term target. That was the lowest growth rate by that metric since February of 2021. Take a look at CPI. We already received the report for June CPI, so that's a little bit more recent data, and that actually spurred that rally in small caps back on last Thursday. It came in 0.1% month over month, and the annual rate of 3%. That was the lowest rate for annual growth in the CPI index in more than 3 years. What's also encouraging, the shelter component, a much larger portion of the CPI than the PC, and that's the reason why you see CPI higher. That came in at 5.2%, still above overall inflation, but that is the lowest level that we've seen on the year-over-year in a couple years, and shelter starting to come down. These are encouraging metrics. Powell also commented that this somewhat encourages the belief that inflation is heading toward their target. In response to both of these metrics, we saw small caps outperform at that 10% metric that we just talked about, and we saw the odds of 3 rate cuts increase dramatically. My thoughts are we're going to see a rate cut in September, and then the last 2 meetings we'll have 2 rate cuts following that to give us 3 by the end of the year. Of course, the data, something could change that could speed that up or slow that down, but with 3 meetings after this July meeting, first cut in September, potentially 3 by the end of the year, that's what's expected right now. And finally, this isn't news to you, but I hope everybody stays safe out there. It's kind of a crazy day, especially for those traveling. A lot of outages around the globe. CrowdStrike rather. Cybersecurity related to Microsoft's operating system caused widespread outages of Microsoft operating systems. Media outlets were offline, disrupted millions of businesses globally. It's just a little bit of a surprising, shocking reminder of just how linked businesses and society are relying on these technologies, and a little bit scary out there, but a good reminder of all the systems that rely on that. So with that, I want to thank everybody for watching. Have a great weekend, and I will see you next time.